Welcome to this video, which is on March the 11th. It's Saturday. We're going to be looking today at two currency pairs. They're two of our favourites at the moment. Regular viewers of our weekly forecast will guess what they are already. They are AUD, USD and USD CAD. Now, in terms of these pairs, they're moving quite nicely for us at the moment, but we think there's far more profit potential to come. Now, when we update the charts in a moment, I also want to look at the charts in relation to the Commitment of Traders report from the CFTC. Regular viewers will know it's our favourite tool in Forex trading. For new viewers, I'm putting a link under this video where you can learn more about them. Just say very briefly now though, we always want to be trading with smart money commercials against non-commercial speculators, and you'll see why in a moment. I also want to look at another couple of charts today as well. They are crude oil and iron ore. Now, in terms of I'm looking at these charts, just basically want to do some simple intermarket analysis, which is the phrase coined by John Murphy. When you look for clues where one market might go in another market. Why are we looking at crude oil and iron ore? Crude oil is the biggest export of Canada, and iron ore is the biggest export of Australia. And you can get real clues to where a currency pair can go by doing simple analysis like this. Okay, I mean, we do it with other interrelated markets as well, but today I'm just going to focus on iron ore, Aussie, crude and the Canadian. Right, what we'll do now is we'll look at the charts and then we'll come back and I'll just sum up briefly at the end. So let's have a look at the charts now. Crude oil, and what we have here is obviously the price action, but we've also got the CFTC net traders at the bottom as three lines to show the divergence. Now, in terms of the top line, the green one, that is the non-commercial speculators, i.e. the large funds. The middle line, the red one, is basically small speculators. It's totally irrelevant for what we're doing. We're interested obviously in commercials, which are in blue, the smart money, and how they're moving against the speculators, in green. Now, when we're down at 44, what you'll see is the two lines are fairly flat. There's not much movement in the commercials or in the speculators. Then as we move to the upside, you'll see the speculators start to buy, commercials start to sell, but we travel sideways, okay? Now, you can't get any, can't push higher, okay? We've got basically sideways channel with 54 really being the top of the range. Now, what I want to draw your attention to is this candle here on Tuesday, February the 21st, okay? You have a record net long speculative position opposed by the commercials. See the poke higher, then she comes back. Okay, that is a warning sign for us that crude oil is going to break lower, and if crude oil breaks lower, then the CAD is going to come under pressure, and you can see what happens. We roll over this big candle down here, and then we break 50, and then we come down to here. Now we would expect more selling pressure in crude oil. But if we take a look at the Canadian dollar chart in the last couple of weeks, you can see why we felt this candle was so significant. It's the CAD daily chart up at the latest CFTC net traders positions from Friday on the left, just in text format. But before we look at them, just want to look at the chart. And in terms of this support line I've drawn here, okay, back in February, what you had was, when we've got to this level, we basically had a commercial buying of the USD, okay, and selling of the CAD. The non-commercials, the speculators, wanted to sell the USD. So when we get down to here and start to find support, we want to be with the commercials, okay. So what alerts us to our entry is this candle here, pokes through support, comes straight back up. We want to come through the 20-day moving average down sloping trend line. We get long, okay? I've highlighted this candle here, which is when the record spec net long position was hit in crude, okay? Now, we're already bullish the USD in terms of we've got the commercials on our side. We're thinking the USD CAD is going to be going up anyway, but we know if that speculative net long position in crude gets washed out, it's really going to help the USD go up on the CAD. So what do we get? We get a little bit of up, down, back to the 20, then these blue candles up here, and we move up nicely to 135. Obviously that move was supported by the break to the downside in crude oil. So from our entry, 130.80 to 135, that gives us a really decent profit, 420 pips. Now, we don't think the move is over yet, actually. Although I put 135.70 as resistance on this chart, I think that level is actually going to give way. And the next level for us is 140 on the weekly chart. However, in the short term, we're basically a little bit overbought in our view. I go to the CFTC net traders on the left. I can see the non-commercials are still bullish the CAD by just nearly 2 to 1. Commercials bearish the CAD, bullish the USD by nearly 2 to 1. But the groups have lightened up, which you would expect because you've had such a big rise. So I would expect some sort of retracement now, and that retracement will be a buying opportunity. So what we've done is we've booked out 50% of our profit into 135. At the moment, we're looking to put it back in to 134. So in terms of the USD CAD, from our perspective, we had sort of double support, or in our view, from the commercials, how they were acting in crude oil, and also how they acted in this pair, when we came into that support level. So it really gives us, or gave us, confidence to hold the move. We still think there's more, but like I said, lightened up 50% of our position. We'll be looking to get that back in on a pullback and see if we do get up to that 140 weekly resistance level. We shall see as we move forward. But that's my analysis of USD CAD. Go and look at AUD USD, the chart. I just want to go through this iron ore chart, which is a weekly chart, just very quickly. Now, in terms of why iron ore is so important in terms of the AUD USD, it's the main export of Australia. And I've drawn a level here, 65, where we had a breakout. Iron ore prices moved nicely up above 85 here, okay? Aussie dollar is gaining support from iron ore at this time, okay? We gap higher, okay, just a month ago. Get above 90, get up to 95, but that didn't help the Australian dollar move higher, okay? Now, we just said it in our weekly video, we just think the bullish fundamentals are peaked for the Aussie. And psychologically, a nice move down in iron ore is going to hurt it, okay? And you can see what happens. It will get up to 95, come down, try and get back up. Then we go down, fill this previous gap, and we're going to go lower now in our view. There's no CFTC net traders positions in iron ore. The reason we actually thought iron ore would come down is it's mostly Chinese speculation in the market, and the Chinese authorities want to clamp down on it. So I think there's more downside in iron ore, which is going to weigh on the Aussie dollar. So let's now move to the AUD USD chart. The USD daily chart, done the CFTC net traders latest report for Friday on the left. I'll come back and look at that in a moment. But first of all, what I want to do is, if we look at the 77 level here, okay, Aussie was trying to decisively get above it, and iron ore prices are surging. They should support it. They don't, okay? So we're alert from a breakdown. As we said in the last video, we want to come through the 20-day moving average, come through the 20-day, nice big red candle down. Saying in the last video, we would see what happened. We wouldn't be taking any profit or anything like that, or moving our stop too close. And this is where, the CFTCs, and when you look behind the chart, iron ore, for example, gives you an advantage over price action traders, because what a lot of price action traders are going to do is, as soon as it comes through 76, you've got some support over here, okay, they're going to sell. Many of them are going to sell at the close. Then what happens? Goes lower, comes back up. Now, price action traders
most of them will have close stops, or they'll want to bring their stop in close when they see that blue candle. Some get taken here on that tail. That's the stop hit. Okay, down she comes. Then she goes nicely to target for us. As soon as this occurs, I can bring my stop down from behind 77 to behind the 20-day moving average. Okay. Now, in terms of our perspective of the chart, now we get to 75, so we're going to take 50% of our profit, so we get basically 150 pips off the table, and we've got the option. We can put it back in on a rally, okay, back towards 76, get in a better price on our second position, or if we break lower, we're still in. Obviously, it's a weekend, we might gap or whatever, but we come in, let's say, at 74.80 or so, I'll drop in the second position. Yeah, on weakness. So I've got the option. I can put it back in on strength or weakness. So I've lightened the position, got some profit in the bank, and we can then see if we move down to our second target at 73. Now it's an okay profit at the moment, but 73 will make it a really nice profit, and I think we should get there. But what do the latest CFTCs tell us? If we look at the non-commercials, they've got 85,000 long Aussie, 34,000 odd short. So they're basically long by over 2 to 1. Other side, commercials, 28,980, say 29,000 longs, the 84,000 shorts. So nearly 3 to 1 in favour of shorts over longs. Now, these positions are not as extreme as last week, but there's been no big moves by the commercials to significantly lighten up their Aussie shorts. So from my perspective, I just think we could get some counter trend action to 76. We might even run on towards the 20-day moving average, that tail again. But from the way we see the chart at the minute and the CFTCs, we think we should be coming down to the 73 level. So we'll see how this one pans out. It's going okay at the moment. Hopefully we'll get a decent profit out of it.
We'll come back after that short analysis there of USD CAD and AUD USD. Now that's as I see the charts right now. Of course, my view can change in line with the market action. If you want our daily analysis of major Forex pairs, simply click on the link beneath this video. Now, in terms of using intermarket analysis and the CFTC net traders, we did very simple analysis there, but it gives you a deep insight or deeper insight into where the price action may go. So you get clues in advance, and also gives you the confidence to hold for big moves. And I think that's really hard for just pure price action traders. And the example I gave there, I think, of the Aussie dollar when we sliced through 76, a lot of price action traders I know came in on that. Then of course you see the blue bar coming back to 76 or closing at 76 the next day. Load of them are going to be panicked out for a minor profit or a break even. Then the rest will either have close stops or tight stops behind the level. And you can see them just get cleaned out by that tail. Then prices go down. And I think, a lot of traders always think their entry is the most important thing. Your stop is just as important. You need to have good protection, but it needs to be out the way of those spikes that can take you out of a big move. Okay, so in terms of what we looked at, what's behind the chart, also you just have the confidence to hold for those bigger profits, the 300 pip profits, the 500 pip profits or more, and you need a good few of those each year, or we do anyway, to really boost our bottom line profits. So that is the video for today. I hope I haven't missed anything out. I'll be back with some more CFTC analysis and intermarket analysis in future videos. Thanks for watching. Take care. Have a good day.